Hello again, everyone. Welcome to the Options Mentor. Well, the market did struggle a little bit this week with, wow, could you believe it? There was actually some concerns that maybe AI isn't worth the lofty valuations that it's been put at. I remember back whenever it was Nvidia was worth 1 trillion, and they were saying then that was nowhere near any uh, near that kind of value in business coming their way, and now they're worth six. I think it's six, five or six. So the market's beginning to get concerned that maybe they put the cart before the horse, or maybe they did a little history and read back about how the dot-com ended whenever market participants started to kind of really would like to see some income instead of just promises. So you see all that weakening in the market. Now, this coming week, we have a lot of Fed speakers. Of course, the market's always looking for some kind of cheap money to play with. And also, we could have some government reports by the end of the week, CPI and such, if they can get the government back open. There's been a minor amount of improvement in the negotiations. The heat's getting turned up. You have this food stamp issue where they're not being issued in many states, and also the air traffic controllers. They've had to cancel flights all over the place, and it's getting worse all the time. So I think the pressure is getting really high to get the government back open. So I wouldn't be surprised if it is by the end of the week. Now, the market didn't really go down when it did get shut down, but of course it'll go up as an excuse whenever the market opens up again. We'll see how, whenever the government, that is, opens up again. So we'll see how all that plays out. More to come this week. It could be a fairly newsworthy week if they can get that open. And all those Fed speakers, depending on what they say, the market expects a quarter point cut for sure, and maybe even more than that by the end of the year. So, what can we do in this circumstance? I'm going to start out here just by looking really quickly at the SPX chart. You can see we've really taken a dive this week. And by the way, VIX over here was well up into the 20s. Then we had that late day rally as the old dip buying came back in. They decided the market had been beaten up bad enough, and let's just buy the dip, the poke and hope. Let's hope for the best and see if maybe the market can gain some footing. So that's really what that rally was about, based on nothing is normal. And we will see how that plays out for them this week. So obviously, we want something that maybe isn't so attuned to volatility, and maybe also, as I've been telling you, has a lot of room to it. That's become very apparent. I closed the trade this week with my trade alert service that we had to have all the room we had in it. Got the thing off at a nice gain, but you've got to pick the right trades at the right time and then deal with them, of course. But I was looking at this fly combo. Now we've talked about these a lot, and I'm going to talk about a couple of different ways to approach it maybe this week if it seems of interest to you. And by the way, I always do these on paper. If you're not familiar, haven't done them before, you should always learn something thoroughly before you ever put real money into it. But we have a couple of choices. One would be a double fly. That's a fly where the center of it's above the market. I use a call fly for that. And then I put a put fly centered below the market. I'm basing all this on Friday's close of 67.28. Of course, if you decide to do this, you'd want to do it based on wherever we're trading at the time this week. And I went out here to the 21st. That is really, really tight as far as days to expiration. You could go out certainly further. Normally, I would even go out one more week. I don't have a problem with you doing that at all. Look what happens here if I do just go out. We'll just look at the double fly. Here's the 21st. If we get to the upper break even, we're down 780. Lower break even down 148. Let's just change this to the next, which would be the 28th. And now or tell you what, let's just go out to December 5th. Really give this thing some time. The first Friday in December, which I think would probably be a pretty good time to do this as far as timing. Now look, you're down only 400 here and 20 bucks there. Probably the better choice, isn't it? Go out a little further. Yes, your time decay slower, but in these times when you need a lot of room, it's best not to be down a whole lot whenever you're on the edges of this thing. So this is one approach, the double fly. Let's look at it. It would cost us a 1900 there. You got because of the way the brokerages margin a asymmetrical put fly for some reason. They decided it's buying a vertical and selling a vertical, so they don't treat it the same as a call butterfly. Ends up being about the same price, but instead of having it all in the debit like this call fly, you can see it's $19. You can see, look at that, the debit is only $650 in the put. Why is that? Well, because they put margin in it. So really, this put fly would cost you about $1,655 if you add the margin into it, and the call fly 1900. So what's that, puts us about 3500 right there for the double fly. You're short 130 Vegas, so if volatility does go up, that's not so friendly to you. So let's look at another way of playing it, and that is, what if we did a calendar selling that same Friday that the fly's in, which would be December 5th, and then buying, let's just buy that long 4 days later. It's been working very well as a width. So what if we go down to 67.70, buy a couple of put calendars. Now this trade costs us right about 3,000 bucks by the time you add all this in. And what do we have now? Now we have a Vega of 20. So remember, we were over 100 short Vegas. Now we're long 20, which really, it's not so much short or long here. It's the fact that you have less volatility exposure. Volatility is going to play a lot less of a role in this trade because it's only 20. 20 long. If it goes in your favor a point, you make 20 bucks. Goes against you a point, you lose 20. As opposed to that double fly where it was over 100 good or 100 against you. So to me, another thing you might want to look at here, by the way, is look at the thetas, 57.50. What if I do the double fly? 38. Calendars are very, very theta rich. They have a lot of theta to give, good boosters, and you can see that we'd have a lot faster burn, perhaps a faster path to profit if we did the fly calendar. However, you have a little bit more room if you do the double fly. I think you could do either of these. I would lean towards the calendar fly. I really like that faster theta burn, and you still have lots of width, have to go below 6,600 to adjust on the upside, or try to repair it and up close to 6870 on the upside. So lots and lots of room before you'd have to take any action to manage your trade. And with these, I like to get 8 to 10% of what I paid for it. Now, this is where the combo does have a little bit of a problem in that you have to put the trade on as two separate trades. I know there's an isolated brokerage here and there that might let you put on it all and all at once, but most brokerages won't. They have a 4-leg limit, and this is 5, of course. So you'd have to just, what I do is just put on the fly, put on the diagonal, or the other way around, just boom, boom, one right after the other. Don't try to time it or game it, thinking, oh, I'm going to put the fly on when we're down and this counter on when we're up. Don't try that because the market isn't going to cooperate just because you need it to. Just put one on right after the other, and then watch your P&L open. If you had about 3 grand in it, maybe around 250, $300 P&L open, you see it's pretty consistently there because it can bounce around a lot. Then I would just put an order in to sell both of these at whatever the mid price was and work my way out. Now you can expect a little slippage. Most of the time, if I was really going for 300, I'd probably wait till the P&L open was above 300 a lot. And once again, I know it's bouncing, but if most of it, time you're looking at is above 300, then maybe do it. So if there is slippage, you'll still be hopefully a little closer to that 300 goal. And that would be true whether you do the double fly or the fly calendar. So that is the setup I think I like for this week so far. As always, I'm doing these on Sunday. You have to look and see what happens by Monday. What will the market be like? And we could have a lot of movement with Fed speaking and these negotiations with the government. And just if there's any further weakening, or maybe just people decide once again that AI, NVIDIA, whatever, which is now, I believe NVIDIA is 20% of the SPX now, and the Mag 7 tech stocks are, I think they basically moved the thing. It's all about that. I told you guys last week that well, I think one day last week, week before last, I believe, we hit an all-time high, and nearly 400 of the 500 ended the day down. But since all these stocks that run things ended the day up, it made it look like the SPX. Hey, we're at all-time highs when really there's very little breadth to the market. That can be very problematic when these very few stocks are propping up the whole thing. And at this point, really, it's one concept propping up the whole thing, AI, just like .com. Don't forget what that happened. This is the exact same thing, folks. All you have to do is say AI and your stock runs. All you had to do is put a .com on your name and your stock ran back in the day. And we had lofty valuations. Same scenario, although I think at this point it could be even worse than that because we've gone so far up, so far up on this. I think it makes the .com era, I think it's going to make it look tame compared to what's going to happen here whenever the air finally comes out of the bag. Oh, and by the way, Tuesday, the bond market's closed for Veterans Day. That can also have an effect on the equity market. Just keep that in mind. But that's what I got for this week, folks. As always, check out the links in my description. Take a look at my courses. I have a lot of these things in depth you can learn from, particularly my new 2025 update, where I update all the major spreads I use, when I put them on, how I put them on, how I manage them, how I adjust or repair them. It's all in there because we've had a lot of changes over the last year and how we're managing things with the market continuing to grind up and a lot of perversion in the market with this call. Everybody wants call options because we're going up, and plus a lot of younger participants on apps like Robinhood and such, not large accounts, so they're buying things with more leverage, like call options. So there's a lot in the zero DTE. All this has changed how the market moves and how to manage trades, and that's all in my update. So check that out. And as always, you can be with me every day over there or get one-on-one mentoring with me. Look for those links in the app. And I'll be back with you next week. Hit that like and subscribe. I appreciate you guys. Talk to you next week. I hope you have a great trading week. Bye bye.